Hello everyone, I am Anil once again on behalf of eDot Academy. I welcome you once again in my class. So today I am going to start module C of your BFM. So starting with the treasury management, first we have to see what is treasury. So treasury is a separate wing in all the banks who manage the fund. Okay, so basic function of the treasury is to manage the fund. And nowadays integrated treasury, the concept is also come in the picture. So that means earlier there were three treasuries who were managing money market and security market and foreign exchange. Now all these treasuries has been merged, and most of the all banks they are following only one treasury, that is called integrated treasury. So basic function of the treasury is to now earlier it was only the fund management, but now they are concentrating only on the money market also, security market also, and foreign exchange market also. So starting with, we'll start from the first point again here. So fund management has been the primary activity of treasury, but treasury is also responsible for the risk management and play an important role in managing ALM, means asset liability management. Okay, and now demat accounts are maintained by depository participate to hold securities in electronic form. Friends, I want to remind you in this model C, each and every line is very important, so you can concentrate. Okay, you can see the video many times, no problem. And because many questions can be asked, I have just draw down very only point wise point, so the time is not wasted. So you can focus on the each line, and each line is very important here. So I will be covering only the short. Okay, so we'll start once again. Okay, so demat accounts are maintained by depository participants to hold securities in electronic form. So in our country, here are two depository participants. There is NS, DL, and second is CDSL. Okay, CDSL. Okay, so India we are having the two depositories, those who are dealing with the demats, and they are keeping the demat in electronic form. Okay, at present scenario, treasury function is liquidity management and considered as a service center. So you have to keep in mind treasury is also considered. I'm just focusing, I'm just marking here, it's important. So treasury is also considered the service center. So main function now has liquidity management and is considered as a service center. So if he ask you what is the function of treasury and what is the status of treasury, so you can say treasury is a service center. Okay, and from an organization point of view, treasury was considered as a service center, but due to economic reform and deregulation of market, treasury has also evolved as a profit center. Nowadays, uh, treasury is considered to be big profit center. Okay, and why it is considered big profit center? Because the expenditure on maintenance of treasury wing is very less. Okay, that means compared to branch, the expenditure on maintenance of treasury is very less, and now they have become as a profit center. Okay, that means from service center to they have become the profit center. Now treasury connect core activity of bank with the financial market. Okay, because our branches they function as a core activity, and treasury they are involved in the financial market. Financial market such as forex trade is there, uh, money market is there, foreign exchange is there. So because branches they cannot connect with the security market, they cannot connect with the foreign exchange, because the person working in the branch may not having their knowledge. So treasury wing they are very expertise in this field. So what is their role? They connect the basic activity of the bank to the financial market. Okay, investment, securities, and foreign exchange business are part of integrated treasury. This is very important. Integrated treasury means investment in securities and foreign exchange, because now this has become the part of activity as security and foreign exchange management. So they are also investing in the security and foreign exchange. So that has become the part of their business. Okay. Next, next point is same. So I'll repeat once again. Integrated treasury refers to integration of three: money market, security market, and foreign exchange. And bank have been allowed a large limit in proportion that their net worth for overseas borrowing and investment. Now RBI has allowed banks that they can do borrowing from other countries and invest in other countries. That means now banks are involved in the international business also. Bank can also source fund global market, okay, and swap the funds into domestic currency or vice versa. Swapping means changing, converting. Okay, that means bank can freely convert, like they are having USD, then they can easily convert to Indian rupee, or they want Indian rupee to USD, they can freely convert. Then next, treasuries transaction with customer is known as merchant business. This is very very important. Okay, that means treasury is also involved in the merchant business. Treasuries transaction with customer. Treasury also deal with direct customers. Okay, the big customers, those who want to invest in the foreign exchange, money market. So whenever the treasury conduct business with the customer, or they deal with the customer directly, without coming the branches into contact in between. So this is known as merchant business. So treasury is also involved in merchant business. So treasury involve the fund management, investment, and trading in multi-currency environment. Okay, so treasury deals with the multi-currency, maybe USD dollar, maybe Japanese and maybe pound, maybe Indonesian dollar, like this. And so they deal with the multi-currency environment, and they manage the fund, investment, and trading. And next refers to what are globalization. So globalization is nothing but integration between domestic and global market. Like India has also uh, liberalized the foreign direct investment in many sectors. So this become the part of the globalization. Okay. RBI has been progressively relaxing the exchange control. Earlier, India was this foreign exchange were extensively controlled by RBI and government of India. Now they are slowly opening the market for the foreign direct investment. Okay. The Exchange Control Department of RBI has been renamed. Exchange Control Department of RBI has been renamed as Foreign Exchange Department with effect from January 2004. Okay. That means Exchange Control Department has been renamed as Foreign Exchange Department with effect from January 2004. Though Treasury trades with narrow spread, the profit are generated due to high volume of the business. Okay, because the business is volume of business is very high. Like in branches, no, we carry out the business per day. Business does not exceed like 2 crore, 5 crore, but in the you can see that Treasury they deal 5,000 crore like this in one day. So their volume is very high, and but because narrow is very less, that means like their spread is very less. I'll just give an example. Like say they've been dealing with 6.5 to 6.55. So you can see what is the narrow. Okay, so that means they'll be borrowing the 6.5%. They are lending with the 6.5, or they are making profit with the 6.55% rate of interest. So their narrow is very less. Plus, but because due to the very high volume of business, they make the profit in one day, very huge. The next, foreign currency position at the end of day is known is there is very important open position. That means whatever foreign currency they hold at the day end. Okay, foreign currency position at the end of day is known as open position. So you can say sometimes you can be asked what is the open position. So foreign currency position at the end of the day. Whatever the foreign currency is held, that is called open position. Okay, open position is also called proprietary position or trading position. So three names are here for the open position. You can see here. So I'll repeat once again here. That means open position is also called proprietary position and trading position. Okay. Now Treasury sells foreign exchange services, various risk management product, and structured loan to corporates. So Treasury sells foreign exchange services, various risk management product, and structured loan to corporates. Okay. And one more important point is coming here, that is called forward rate agreement, FRA. So forward rate agreement is entered to fix interest rate in future, so that interest rate risk is avoided. So this is very important point here, that for the treasury can enter into agreement with the other agencies, so that variation in rate of interest is mitigated. That means interest rate risk is minimized, or you can say mitigated. Okay. And SWAP is offered to convert one currency into another currency. Sometimes what happens, if the Indian rupee is going down, so you can convert to USD immediately, so that the fall in Indian currency is mitigated and you can convert easily to USD. Okay. Likewise, this is called swap, or vice versa. Allocation of cost to various departments or branches of the bank on rational basis is called transfer pricing. Okay, that means what is the, I told you in the starting, the main function of the treasury to fund management. So they keep on allotting fund to various branches of the bank. And treasury function with degree of autonomy and headed by senior management position. And treasury comes direct contact with the head office. So they have their own autonomy, because their business is very huge. They deal with the large corporate, they deal with the international companies, they sometimes Indian companies also. So that's why they have given large degree of autonomy, and they headed by senior management position. Sometimes though that decisions are also taken very quickly due to very speedily change in the foreign exchange. So treasury may be divided into three main divisions, that is called dealing room, back office, and middle office. Same, dealing room means front office, you can say. Back office, totally back, and middle office. Securities market is divided into two parts: primary, secondary. And primary is the when the primary market means when initial public offering is there, and secondary market when trading is there, trading through exchange is there. And security dealers deal only with the secondary market, because security dealers, they deal with the secondary market means they deal with the through the foreign exchange. Otherwise, when company they issue their initial public offering, so they offer to the public directly. So security dealers do not come into the picture, or they don't with the company directly. Okay. Okay. Back office is responsible for verification, settlement of deals concluded by the dealers. Okay. So front office, front office, or you can say what the name, their dealing room they have given here. So dealing room, they always directly deal with the customers, and back office, what they do, final touch is given by the back office. They are responsible for the verification and settlement. And what is the middle office? So middle office, they various roles, like such as uh, following the rules and regulations, documentation part, and like many. So mid office is nothing but they are between the link between the dealing room and the back office. Middle office monitor exposure limit also, stop loss limit also, and report to the management and key parameters of the performance. So this is the role of the middle office. Yes, one more point is very important, that minimum marketable investment is minimum 5 crore. Now you can see this is minimum for the uh, treasury wing. Okay, where some of the branches they are doing 1 crore business in one month or one week only. Okay, so the treasury wing is dealing minimum investment is 5 crore. So you can imagine the how much big investment they're building. Okay, now driving force of integrated treasury are is very important. Okay, that means driving force means what are the basic functions they are doing, what is they do actually. So number one, integrated cash flow management. You can see that treasury being the responsible for the management of fund. Interest arbitrage means they try to earn more interest by borrowing here and investing some other place. Investment opportunities are there. Risk management is there. Function of, so other than the driving force, we'll see the function also here. So driving force is also one type of function only. You can see here once again, integrated cash flow management, interest arbitrage, investment opportunities, and risk management. Okay, that means in broader sense, if you see the what are the function, you can say that this is the driving force, and if micro level, if you see, this becomes a function. Okay, so what are the functions of treasury wing? Meeting reserve requirement, efficient merchant services means services to the customer, global cash management, optimizing profit by exploiting market opportunities in forex market, money market, and security market. That means their main motive is to optimizing profit in all these three markets: forex market, money market, and security market. This point is very very important. You have to keep in mind. One question I 100% ask out of this: what is the function in a integrated treasury? So you can say forex market, money market, or security market. Their function is also to risk management, assisting bank management in ALM. ALM is asset liability management, and immediate impact of globalization in threefold. Now we'll see what are the immediate impact of globalization in threefold. So number one is the interest rate, and number two is the new institutional structure, and derivative were allowed. So because when globalization is there, that means now all markets are open to global, the interest rate will change very frequently, or there will be variation in interest rate also. Okay, and due to globalization, that means different companies, they are going and doing business overseas. So new institutional structure is also coming up, and due to globalization, the derivatives were also allowed. Okay, so RBI is allowing bank to borrow and invest through their overseas correspondent, because nowadays due to globalization, all banks are having their foreign correspondent in other countries. So now they are allowed to borrow and invest. Okay, in foreign currency up to 25. This point is very very important. Up to 25% of their tier 1 capital. Okay, or USD 10 million, which amount is higher. That means whichever amount is higher, up to that they can invest. Okay, here condition is that up to, that means they will not cross the 25% of that. Okay, or USD 10 million. So this is a limit has been given. It must be which is lower. Okay. Now next, treasury products have become more attractive for two reasons. Number one, treasury operations are almost free of credit risk, and they require very little capital allocation, and operating cost is very low. I told you the operating cost of treasury wing is very low as compared to the branch, because branches, the location wise, and the branch location is totally diversified. Different locations are there, so for maintenance of the one branch become very high, whereas the treasury wing, the expertise manpower is deployed, and only few person working in treasury wing, they can invest a huge amount of money that should have been work out with the hundreds of branches. Okay, now next, treasury generates profit from undernoted business also. Okay, these are conventional and foreign exchange business and money market dealing. Conventional business means our old business, old type of business. So foreign exchange business and money market business. Number two, investment activities like SLR, non-SLR, and investment in subsidiaries. Okay, interest arbitrage and trading is a speculative activity where profit arise out of favorable price movement during the interval between buying and selling. So they can do the trading also with the change in interest. Okay. Now what is arbitrage? We have used the what here, no, interest arbitrage. So what arbitrage is nothing but is benefit accruing to trader who play in different markets simultaneously. Meaning is that you purchase one security same time at this point, like in the Bangalore, and you can sell simultaneously in New Delhi. Okay, just I'm giving you one example. So same time, so you can come make one agreement that I will purchase this, and you can same time you can sell with a minor margin of profit. Okay, so it's called arbitrage. And derivatives are financial contract to buy or sell or to exchange cash flow in any manner at a future date. Okay, so you can do contract to any buyer. That means, and you can fix the price. Okay, so price remain same. Okay, now next, emerging market countries are countries with fast developing countries, which are largely market driven. Like India, India is very fast developing country, so it is called emerging market country. Okay, and demat account, everybody knows that share and securities are held in demat account only, so are maintained by depository. I gave the example NSDL and CTSL to hold securities in electronic form only. Now no physical movement is there, you will not get any paper out of that, so that transfer of securities can be effected by debit and credit to the respective account holder without any physical document. Now we'll start with the next unit, that is called treasury products. So in foreign exchange market, free currencies can be bought or sold readily. Means free currencies of are those countries who belongs to, that means their market are highly developed, like USA is there, Canada is there, uh, Australia is there, Great Britain is there. So these country, Japanese yen is there. So these currencies are freely bought and sold in the foreign exchange. Okay, and foreign exchange market is most transparent and it's virtual because it is free market. Free market means that there is no barrier between the customers and traders. And foreign exchange market may be called near perfect with an efficient price discovery system. Okay, because the control of government is very very less. Some of the countries, they are not having any control over the foreign trading, but India somehow we are managing with the control of RBI. Okay, the spot settlement takes place 2 working days from the trade date or on the third date. I just tell you here, uh, one is the cash settlement, and second is the tom, and third is the spot, and next is the forward. So here the four cash settlements means immediate same day, tom means tomorrow plus one, spot means 2 days, है ना? So 0 plus 2, and forward means any other day after forward is called, any other day after spot is called forward. Okay, now customer expecting foreign currency transaction cover their risk by entering the forward contract. Okay, forward contract is very good because some rate of currency may change, so you may not bear the loss. Okay, loss may not happen with you, so you will go for the foreign contract, so that you will get the same rate of currency. Okay, that means whatever rate you are entering, you will get the same rate of currency. And treasury enters into foreign contract for making profit out of the price movement. Okay, same thing here. So forward exchange rate are arrived at the basis of interest rate differential of two countries. Okay, because some two countries like India, INR is there, and USD is there. So both the countries are having their different rate structure. Okay, so what differences are having in the future? Based on that, the forward exchange rate are decided. Okay, combination of spot and transactions are called swap. You may go for the swap also. So combination of spot and forward called the swap. Swap route is used extensively to convert cash flow from one currency to another currency. Okay, I told you swap is the conversion of one currency to another. So swap is same. Interbank loan, short-term investment, and nostro accounts are the avenue for investment in foreign forex surpluses. Okay, so interbank loans, short-term investment, and nostro accounts are avenues for investment of forex surpluses. That means you can invest if you are having the surplus forex, then you can invest through the nostro account. Okay, nostro account, short-term investment you can do, and interbank loans also can be given. Okay, Now, nosto vosto, we have learned many times. Nosto account or current account maintained in foreign currency by bank with their corresponding bank in home currency of the country. Like if India one bank is maintaining in USD, so SBI will maintain like the US they are maintaining. So SBI will have their account in the federal bank in dollar only. Okay, USD. And if one bank of USD is maintaining SBI, they will maintain in INR. Okay. So SBI's Nosto, USD and US bank in IR. So likewise, okay. Now next, balance held in Nostro account do not earn interest. This is very very important. Whatever balance is there in the Nostro account, there will be no interest paid. Okay. Rediscounting of foreign bill is an interbank advances. Like when you rediscount the foreign bill, this is nothing but interbank advances are there because you are rediscounting the foreign bank. Okay, that means bill of foreign bill means foreign currency also. This is an interbank transaction is involved. Okay, RBI has allowed bank to include rediscounting of bill in their credit portfolio. Okay, that means you can go for the international business by rediscounting of bill. Okay, and money market refers to raising and developing short-term resources like issue of commercial paper is there. Other borrowers also. Money market refers to raising and developing short-term resources. And interbank market is divided into call money, notice money, and term money. We'll see one by one. Call money refers to overnight placement. Okay, call money refers to overnight placement. If you are like borrowing money only for the overnight, that will be called as a call money. And if you are borrowing money, placement beyond overnight for period and not exceeding 14 days. Means beyond 1 to 14 will be called as a notice money and 1 day is called a call money. Term money refers to placement beyond 14 days but not exceeding 1 year. Okay, so here the difference between call money, notice money and term money. So I'll repeat once again. Call money only for 1 day, notice money 1 day to 14 days, and term money more than 14 but less than 1 year. Okay, RBI pays interest on, so I'll repeat once again here. RBI pays interest on CRR. This was before 2007. Okay, before 2007 RBI was paying interest, but with effect from one amendment was brought in the RBI's Act. So now there is no interest in CRR. No interest in CRR. Make the point of it. RBI is not paying any interest on CRR. And interbank market carries low risk next to sovereign risk. So interbank market carries lowest risk next to sovereign risk. Sovereign risk is related to the country because most of the countries they don't fail. They always respect the feelings of other countries. So in interbank also bank follow the respect. They follow the custom. They respect the others. So interbank carries the lower risk next to sovereign risk. Okay. The interest on treasury bill is by way of discount. That is, bills are priced below face value, and this is known as implicit yielding. So now we are talking about the treasury bill. Treasury bill is issued by the government of India. Is by a discount, that is, bills are priced below face value. Yeah, if 100 rupees the face value, also government will be issuing like the 95 rupees, okay, 90 rupees. So they issue below the face value, and this is known as implicit yielding, so that there is 100% confirmed yielding is there, because it will be sold after that 100 rupees only. So those who are purchasing, they will get the profit. Okay, and what is the time period of the treasury bill? So treasury bills are issued 90 days also. Okay, 90 days, 1 year. So 91 days treasury, each issue of 91 days treasury bill is for rupees 500 crore, and auction is conducted weekly basis, that is every Wednesday. Okay. Similarly, 364 days transaction is carried out every fortnightly. That means every alternate Wednesday. Okay. And payment of treasury bill is made and received through Clearing Corporation of India Limited, CCIL. Okay. So CCIL is the main agency through which the payment of treasury bill is made or received. Okay. Commercial paper is also, I told you, commercial paper is short-term debt market paper. Commercial paper, any company, reputed company, they can issue the commercial paper. Commercial paper issuing companies should have minimum P2 credit rating. Okay, they must have minimum P2 credit rating. And banks can invest in commercial paper only if it is issued in demat form. Nowadays, everything is done by demat only. Means not physical form, only electronic form. Okay. Certificate of deposit attracts stamp duty. Keep in mind. Okay. CD is there. That means on certificate of deposit, you have to pay the stamp duty. Okay. And repo is used for lending and borrowing money market fund. No problem. Okay. Now, very important point. Presently, only government securities are being dealt with under the repo transactions. Okay. And repo is also used extensively by RBI as an instrument to control the liquidity in the interbank market. You might have seen the repo rate is being changed, the reverse repo rate is being changed. So by changing the repo rate, RBI controls the liquidity in the market. Okay. Infusion of liquidity is affected through lending to banks under the repo transactions. Okay. And same thing, absorption liquidity is done by accepting deposit from the bank, known as reverse repo. That means when RBI accept deposit from the bank, then they give the reverse repo rate. When RBI give the amount to the banks, then we follow the repo rate. Okay, so these are the very controlling tools for the monetary policy of Reserve Bank of India. Okay, and bank may submit their bids to RBI either for repo or reverse repo. That means if bank wants the money, they can give their bid to RBI, or if they want to hand over their money, then they can go for the reverse repo. And repo rate is always more than the reverse repo. Okay, you always keep in mind the reverse repo is always less than the repo rate. Investment business is composed of buying and selling product available in the security market. Okay. Now, to satisfy the SLR, bank can also invest in priority sector bond of SIDB or NABARD SIDB. So, to satisfy SLR means statutory liquid ratio. Bank can also invest in priority sector bond of SIDB and NABARD. Okay. And state government can also issue state development bond through RBI. So, state bank is also permitted to issue their bond. Okay, for the development of the state. Okay, corporate debt papers includes medium and long term bond and debenture issued by corporate and financial institutions. Okay, debentures and bonds are debt instrument issued by corporate bodies with or without security. Okay, in India, debentures are issued by corporates in private sector and bonds are issued by institutes in public sector. So this is the main difference. Debentures, corporate private sector, and bond with the public sector. Okay, like one company, any bank is issuing the bond, then public sector, or because public sector bank, they issue bond. But private corporate like Reliance is issuing the debenture, so they can issue the debenture. Okay, the debentures are governed by relevant company law and transferable only by registration. But bonds are negotiable instrument and governed by law of contract. So this point is very, very important. Okay, I rub it and I just highlight once again here. Okay, I will highlight with the different ink. Okay, debentures are governed by relevant company law and transferable only by registration. That means debentures governed by relevant company law and they are transferred only by the registration. Whereas bonds are negotiable instrument governed by law contract. Okay, so this is the main difference. That means bonds can be easily transferred. Okay, without registration. Okay, if bond holders are given an option to convert into debt into equity on a fixed date or during a fixed period, these bonds are called convertible bond. This option will be given before the issuing is there. So bond holder are given an option to convert it into debt, convert the debt into equity because bond is nothing but debt only. So convert the debt into equity on fixed date or duration of fixed period. These bonds are called convertible bond. Banks are permitted to invest in equities subject to ceiling presently 5% of total assets. Okay, that means they can invest in equity, but they cannot invest more than 5% of their total asset. Okay. Foreign institutional investors are now allowed to invest in debt market subject to overall ceiling currently USD 1.75 billion. Okay. So this is the ceiling, they can invest only up to 1.75 billion. Okay. Index future, index option, stock future, stock options are derivative product recently introduced. Okay, so these are the derivative. Don't remember the names. Only you have to see what are the derivative products are nowadays. Derivative products are highly popular due to risk management. Okay, as well as speculation. Speculation is the make profit suddenly, sudden change. Within 2 days, 3 days, the price may go up and you can make the huge profit. Okay, so that way derivative products have become more popular. Okay, banks are permitted to borrow or invest in overseas market within ceiling subject to guidelines issued by RBI. Present is the 25% of Tier 1 capital and minimum of 10 million USD. This point have we already covered. Okay, the treasury operates in exchange market, money market, and securities. We already covered here. So foreign exchange transaction is include the spot, forward, and swap trades. Money market is used for deployment of surplus fund and also raise short-term funds and bridge gap to cash flow of the bank. Okay. So money market products include treasury bills, commercial paper, certificate of deposit, and repo. Under EEFC, so what is full form EEFC? Export Earner Foreign Currency Account. Actually, this is the account EEFC. Exporters are allowed to hold a portion of export proceed in current account with the bank. Okay, and this is a current account, so no interest is being paid. Okay, GILTS. Now, very important point has come here. GILTS are securities issued by government only. Okay, keep in mind. This question can be asked. GILTS are securities issued by government which do not have any risk, means zero risk. Okay. SGL accounts are maintained by Public Debt Office in RBI in electronic form. So what is full form of SGL? Subsidiary General Ledger Account. Okay, are maintained by Public Debt Office of RBI in electronic form. Okay, this SGL is only to maintain the government securities. Okay, when government securities are issued, so when the bank purchases government securities, they are maintained by RBI in SGL account. Okay, so that they are become easily transferable. Means they are maintained in demat form only. Next, FCNR deposit is dominated in 4 major currencies maintained by NRIs. So FCNR is, what is FCNR? Foreign currency non-resident deposit. Okay. So we'll take one more unit here. Now moving ahead, now we'll see the what is the regulatory aspect. So check and credit cards are near money and also add to money supply. Okay, because credit cards also deals like a transaction of money only. Okay, the money in circulation is indicated by M3. It's called broad money. So M1 is narrow money and M3 is the broad money. Okay, cash component is only 15% of money supply or M3. That means cash component, whatever RBI is issuing, that is only 15% of the M3. monetary policy of RBI is aimed, that means what is the aim of the monetary policy? So it's aimed at controlling the inflation and ensuring is stability of the financial market. Okay, so their main purpose is to control the inflation and ensure the stability of the financial market. Liquidity refers to surplus fund available with the bank. Means there should not be deficiency of the fund which bank cannot pay to their customers. Okay, and excess of liquidity leads to inflation, while shortage of liquidity may result in high interest rate and depreciation of rupee exchange rate. So there has to be always balance between the liquidity. Okay, that means we have to manage asset and liability in the very efficient manner. So CRR is to be calculated, this very important point, on DTL basis with lag of one fortnight. That means every after fortnight we calculate the DTL of the last fortnight. So if this Friday we are calculating the CRR, so we'll be calculating for the last Friday. So that is on the DTL basis, demand, time, liability. And don't take NDTL. NDTL is different. That is net demand and time liability. This is DTL only. So I'm stressing here. Okay, next, interest on CRR. So I told you no interest is being paid by nowadays with the February 2007. So no interest is there. So this point is irrelevant. Okay, and the rate of CRR is present rate is 4%. CRR is 4%. And regarding SLR means statutory so SLR means statutory liquidity ratio is maintained by bank itself in the form of cash, gold or approved security. This point is very important. The SLR is maintained by bank itself, not with the RBI, in the form of cash, gold and approved security. Okay, and what is the rate of SLR? It is 18% nowadays. Okay, so and CRR is 4%. So they have to maintain this much percentage in the form that means CRR they have to maintain 4% of NDTL and SLR they will maintain 18% of their DTL, not NDTL, DTL. Okay. So I'll repeat once again, very important point come as here. So bank can borrow the land overnight up to maximum 100% of their net worth. Means bank can borrow up to 100%, and if point is coming of the lending, so they can lend only 25% of their net worth. Okay, for overnight only. Okay, and securities clearing against assured payment is handled by CCIL, not CCIL, Clearing Corporation India Limited. Okay. So CCIL is a specialized institution promoted by major banks. So all banks are there following the CCIL institution. Okay. Now coming to the RTGS. So RTGS is real-time gross settlement has been fully activated by RBI with effect from October 2004. So what is the minimum amount of RTGS? So it is 2 lakh and above. Okay, no maximum limit, but minimum amount is 2 lakh and above. And for the NEFT, no such limit. Okay, NEFT you can do 1 rupee and no maximum limit is there. Okay. Bank account with all the branch office RBI are also entered with the RTGS. That means now all bank interbank transfer, intrabank transfer, all can be done by the RTGS. There is no barrier. Okay. Infininet has helped the introduction of SFMS. So what is the full form of SFMS? So full form of SFMS is the Structured Financial Messaging System. So SFMS facilitate domestic transfer of fund and authenticate message similar to SWIFT. Okay, SWIFT we are using international level and used by bank for the international messaging. So I'll ask you what is the full form of SWIFT? Society for Worldwide Interbank Financial Telecommunication is the full form of SWIFT. You can remember this full form SWIFT also. And all securities dealing are done through NDS, negotiated dealing system, and settled by CCIL. So we have covered here 3 chapters of module C. I think video will be very lengthy, so I'll stop here. So stay tuned with me. Very soon I will cover 3 more chapters of module C so that your module C is covered. Thank you very much for watching. Stay tuned with me. You can share with your friends, those who are preparing for CIB. Okay, have a nice day. Enjoy.